There's a good reason Qualcomm stock is cheap and its AI potential is debatable. Value investors are arguing that Qualcomm is a way to add AI exposure to your portfolio at a low price. However, this bull case is ignoring the substantive reason behind this chip stock's low valuation. Barring the emergence of true AI progress with Qualcomm, keep considering it a value trap. Let's dive in. Here's the Qualcomm warning. Qualcomm stock is cheap for good reason. Welcome to Timely Investment Research. Qualcomm may not have too many fans among growth investors, but a growing number of value investors are becoming bullish on Qualcomm stock. This maker of semiconductors used in mobile phones and Internet of Things devices is starting to be considered a possible way to play the rising integration of AI technology into a myriad of applications. With this possible growth catalyst, combined with the stock's low valuation, 13.1 times earnings, value-minded investors may see the potential for outsized returns if AI leads Qualcomm back on the path to growth and leads to an increase in Qualcomm's earnings multiple. My view? Whether you are a growth or value investor, it's still best to take a pass on this stock. Shares are low-priced for a reason, and the company's potential to capitalize on AI remains up for debate. Qualcomm stock, cheap for a good reason. Compare Qualcomm's valuation to that of other high-profile chip makers, and you'll see that many of Qualcomm's peers trade at far higher price-to-earnings multiples. However, this is not a mistake on the market's part. For one, Qualcomm stock has a low valuation due to the high uncertainty surrounding future results. The softening of demand for mobile devices and other electronics has had a serious impact on Qualcomm's fiscal results in recent quarters. On a year-over-year basis, revenue has declined by double digits and earnings per share have fallen off a cliff. If that's not bad enough, weak demand is poised to persist. Namely, because of a lack of evidence that smartphone sales demand is on the verge of bouncing back in China. This discouraging guidance calls into question whether the company can even beat the market's already low expectations for earnings this fiscal year, ending September 2023. Much less whether Qualcomm can experience a forecasted earnings rebound next fiscal year. That's not all. Even if demand normalizes in fiscal year 2024, keep in mind other headwinds. For instance, like I recently argued, rising China-US geopolitical tensions. Another one to consider is the forthcoming loss of a large customer. Will AI save the day? Not so fast. Sure, if I were to debate Qualcomm stock with the value crowd, they would be quick to counter my bearish argument. While conceding that the company is facing challenges, they would counter Qualcomm's valuation already takes these challenges into account. More importantly, they would point out that with the company's potential to capitalize on the rise of AI, growth from this could outweigh China and customer-related challenges, and turn this, for now, out-of-favor stock into a hot stock. Yet, while the value investor's bull case for Qualcomm at least has more substance to it than the dubious value as its own catalyst argument, here's my counter to the view that Qualcomm is an AI winner in the making. For starters, the key word here is potential. That is, while Qualcomm could in time successfully tap into growing demand for AI-capable smartphone IoT chips, it's unclear when or even if this will eventually happen. In the meantime, unlike some other chip stocks being valued on already evident AI catalysts, the market will likely continue to price Qualcomm on the aforementioned headwinds rather than on the mere potential to one day cash in on AI. Bottom line, Qualcomm may sport a low valuation, but this factor alone isn't a reason to make it a buy. Far from being a case of market mispricing, investors understand this company is facing multiple challenges and have priced it accordingly. Even if the more value-focused crowd points to AI as a catalyst, this possibility for now isn't enough to counter the evident issues with this company. Don't get me wrong, it's not as if talk of AI with Qualcomm is all hype. The company is at work producing chips for this market, and there is a strong use case for these chips. However, instead of buying now, as this catalyst remains in the potential stage, it may be better to wait for true AI progress to emerge before buying Qualcomm stock. Until then, keep on considering it a value trap. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.